Welcome back to Halftime Report on CNBC-TV18. Let's talk about some big buzzers now. Paytm is up 10% in trade today. Abhishek is here to tell us what's aiding the rally. Abhishek, over to you.
Well, Sonia, they had a con call yesterday. So the key highlight from the con call is that the company expects a long-term payment processing margins to stabilize around 5 to 7 basis points. Massive growth in subscription business, and they see opportunity over there going ahead. The device run rate is about 30,000 a month, and this is expected to improve further as the headcount increases for them. So the financial services now contribute about 22% of the overall revenue for Paytm. The guidance for lending business is that it will grow by 20% to 30% on a sequential basis, that is quarter-on-quarter basis. So the company is also planning to launch UPI Lite, which allows instant small value UPI payments. There is potential for them to add about 10 crore merchants and more than 50 crore payment customers in the near term. We also have an industry-based sources news that, MEITY is likely to send a list of digital lenders to be removed from the Play Store to Google. So MEITY had recently blocked about 138 betting and 94 loan apps which with China links for their alleged involvement in money laundering. So these two things might have been aiding the stock in trade today.
All right, Abhishek, thanks a lot for that. Meanwhile, we have with us the Kalyan Jewellers numbers. The net profit of the company has actually increased by about 11%, but we did have their third quarter update as well. So the revenues have grown at 13%, just as the company had said, and revenue growth of India operations have been around 12%. The gross margins grew sequentially during the quarter because the competitive intensity did come down for them as well. So we'll monitor the commentary coming in as and when we get the press release. But so far, the numbers that we have from Kalyan Jewellers in line with what the company had guided for already.
Okay, all right, in line. So Kalyan Jewellers down around 1.4%. But the big stock of the day, besides Paytm, has to be Adani Transmission. It is surging. This is post its Q3 numbers that it announced yesterday. Vivek is here with the details on this set of numbers. Vivek.
Well, that's absolutely right. So Adani Transmission delivered an operationally very strong set of results. In fact, even in the just recently concluded con call, the management was quite upbeat in terms of the guidance as well that they provided. So when you're talking about the numbers itself, revenues jumped up almost 22% on a year-on-year basis. EBITDA up almost 64%, coming in close to the 1,477 crore mark. Margins expanding almost 1,000 basis points on a year-on-year basis, and profitability up 78%, aided by a one-time impact as far as the tariff order from Aptel was concerned. Now, two things to keep an eye out for. When it comes to the transmission business, system availability was very strong at 99.75%. And when you're talking about the distribution business, this time around, slight softness was seen on back of higher coal as well as power purchase prices. However, the company managed to partially offset this on the back of fuel adjustment charges recovery that came as far as the monthly billing was concerned. When you're talking about the collection efficiency, it remained quite strong, and also distribution losses were contained quite significantly at 5.6%. On the back of that, the stock that opened at the lower circuit has recovered quite smartly and is now perched at the upper circuit.
All right, thanks a lot for that. Well, the other stock I'm looking at this afternoon is Apollo Tyres. Now, Apollo Tyres in trade is down almost about 4%. The reason is that the company in their conference call mentioned a few things which could have perhaps spooked investors. One is the fact that export demand has been quite weak and is expected to remain weak in the near term as well. They said particularly for Europe in their Vredestein business, the demand outlook could remain challenging for the first half of this calendar year. They've also gone ahead and lowered their capex guidance. The capex guidance is now 700 crores, which is 75% of their earlier guidance. This will, of course, help them with the ROCE improvement as well as free cash flow generation. But perhaps the fact that they will go slow on their capex is something that could have spooked the street. On the positive side, though, there are many positives to look forward to for Apollo Tyres. One is that OEM demand continues to remain healthy, both in truck and bus radials as well as passenger car radials. They expect input costs to correct further by mid-single digits in Q4. And their consolidated debt has gone down. They have reduced it to 4,800 crores from 5,500 crores earlier. And that is led by an improved performance as well as a reduction in working capital. So there are a lot of positives, but particularly for today, the fact that, there is concerns in Europe as well as they've going a bit slow on their capex could be a bit of a dampener for the stock.
All right, so that's about Apollo Tyres. But speaking about stocks which are losing right now, LIC Housing Finance is actually fallen about 5% from the highs. Currently, a sharp fall at the low point of trade, and technically as well has fallen below the 200-day moving average. Remember, they reported poor numbers at a time when everyone else in the industry was doing well. So LIC Housing Finance is the one that we're looking at the low point of trade. Take a short break, come back. We get chatting with Sumant Sinha, who's the Managing Director of Renew Power, to decode India's role in global energy.